Hey, what's going on, guys? So today is going to be the first financial video that I do for you. So real quick, if you see me wearing this sort of clothing, more professional, businessy type looking, a little dressier, that means I'm going to do a financial video. I'm going to be wearing just regular workout clothes, active wear if I'm doing fitness video, and then for life video, I'm just going to be wearing whatever. So today I wanted to go over this book. They call this in the financial literacy space the Purple Bible. It's called Rich Dad, Poor Dad. It was written by Robert Kiyosaki. He talks about, he grew up in Hawaii, and he had two fathers. One was his biological father, and he was the head of education, and multiple PhDs, really smart guy, but he was in a different income generation category, which is what I'm going to talk about. And he always ask his dad, like, how do I make money? When am I going to learn about money in school? I want to make money. And his biological dad finally said, go ask your friend's dad, he's an entrepreneur. So it just talks about how people think about money differently, how the wealthy view money, and they're playing by a different set of rules, and they're strategizing the way that they create money differently. So, but today I wanted to talk about the cash flow quadrants, which he goes over in this book. He goes over it more deeply in this book, Fake, and he talks more about the taxes and how each are taxed differently. And I'm going to do a totally separate video on these cash flow quadrants, how they're taxed, because they're all taxed very differently, and when you break it down and really learn about it, it's pretty amazing because some of the quadrants have extreme advantageous tax benefits in comparison to others. So, I'm going to go over the cash flow quadrants. I also want to talk about the difference between active and passive income. So, over here we'll have active, and then on this side of the quadrant we'll have passive. So here's going to be active, here's going to be passive. I'm trying to get a little bit better with my diagrams. I've had a couple people call me out, laugh at my diagrams. So, I'm trying to take my time, make it just a little bit cleaner. I'm not an artist, guys. So first one under the active income category, this is the employee. This is your, your typical wage worker. These people can get paid off of salary by the hour, sometimes commission, sometimes a combination. But you're working for somebody else, and it's active income because you're trading your time for money. That means is you have to actually be there doing the work, putting in the time to make any money from it, right? We also have self-employed. So an example of this would be a freelancer, independent contractor. The epitome of this, what from a traditional education standpoint, what we would be taught in school is if you're a doctor or a lawyer. In this scenario, you actually own your own job, where over here your boss owns your job, or the business that you work for owns your job. Here you actually own your job. This is the first instance where you can start creating multiple streams of income from that one job, because you can take on multiple clients. So every time you take on a new client and you're exchanging your services for them, they're paying you individually, so it's a separate stream of income. But it's still finite in the sense that you're still exchanging your time for money down here, and you're sort of married to your clients because you have to be with them actively, whether it's online like right now or in person. You have to be there. You have to be there physically, and that's the biggest distinguishing thing between these two. Is that something I really want to hit on, is that time is something that is the same for everyone. It's something that we can never get back. Everybody only has 24 hours in the day. So it's the most valuable asset we have is our time, right? So the amount of money in both here and here is limited to how much you can make. So when we start getting over here into the passive income quadrants, this is big business. So in here you're an entrepreneur, you're a business owner. This is where you have the capability to figure out from yourself, look within yourself and think, how can I provide a value and a service to people that I can monetize, right? and you create a machine within your organization where you put in, you're starting out as you're an employee for your own business, and then as it scales, you can start delegating some of that work. So an example would be, let's say you're drafting legal papers. Your company is a law firm, right? And you've calculated that if you work all day, you work your butt off, like 10 hours, 10 or 8 hours, you can draft 100 legal papers, and that'll make you a certain amount of money. Let's say that makes you like $2,000 a day, right? That would be a lot, but just an example. So you'd be making that. You can start delegating that. So let's say you hire an employee to take off about 30 of those legal papers, and they start doing it, and you figure out how much money are those 30 legal papers that he's doing making me? How much money am I making off of my employee that I just hired, his services? That's called ROI. ROI means return on investment. So when you get hired for a corporation, they're thinking, how much do we have to pay this guy to get basically the better end of the deal, the better end of the bargain. Not all companies are 100% profit driven. They can have different goals, but for the sake of this example, I'll use that. So that's a business owner. You can start delegating the work off to where now you have the ability to start scaling your income. And what's really exciting once you start going over here into these categories is it's unlimited. There's no limit. There's no limit to the amount of money you make, because you can keep making the machine bigger and bigger and bigger, and you can keep growing it more and more. And this is also when you start getting really big tax advantages. You get some tax advantages down here too with business expenses, and I'll be going over that in another video, totally separate. Over here you can get even bigger tax advantages. Down here, investor, this is the final section, the cash flow quadrant for passive income. Now here, you're exchanging money for ROI. Again, you're looking for return on investment. So an example of an investment would be, let's say I buy a stock for $1,000, and you're thinking to yourself, okay, I buy a stock for $1,000. In 6 months, what is it going to be worth? So if in 6 months, if that stock that's $1,000, the value grows to $1,500, your ROI in that instance is you just made $500. So this is exciting also because there's no limit to how much you can scale it. You can diversify your investment portfolio as much as possible. There's many different ways to invest, and it's passive because you don't have to be there. And this is where you start having your money work for you, and you're not working for your money. And that's the biggest difference. Here you're working for your money, you're exchanging your time for your money, and here you're spending money to make more of it. So your money's making you more money. Understand? So there you go, guys. That's the video. I hope you enjoyed it.